All right. Let's do it again. Hey, everyone. Glad you're here. Thanks for being here for this private session. We got a group of about 20, 30 people in here. I am interested to know those that are coming into this session, if anyone has anything particular that they're looking to go ahead and work in and focus on. If you go ahead now, right, in the comment section and include anything that you really focused in on or want to focus in on right now. In the past couple of sessions, we've looked at multiple things. And if there's something that's anyone's unclear about, or someone who's looking to take something further, let's figure it out now, where most of the people here, of the 20, 30, whatever it is, people here, like what most people want to focus in on, and that's what we will look for. So here are some ideas. Derek's talking about the use of 2 versus 3 positions when entering. We'll definitely talk about that. Derek? Brian's looking for when we know when to take profit. Entries in ranging markets and or then stop losses in ranging markets. Also something to take a look at. All right. That's a good place to get started from. All of those very, very important questions that we could talk about, and anything else that comes up. Why I keep losing money shorting the markets. That's the easy one, Mario, right? That's the easy one. First of all, stop trading the indices, right? Roman, when to move the stop loss. That's a good one. We'll look at that. That's not to be confused with a moving stop loss, which we don't use, right? Mario, right? Markets are going up. We're all over that, right? We're pretty. We have our thumb on that very well. No, but stop shorting the markets, and stop trading the focus on the FX pairs. That's where you're going to learn how to make money. So Dan, this is not really something that's important for you to focus in on, because you don't need to know that, Dan, and we'll take a look at that quick sec. You don't need, in order to trade the strategy that you're working on here. You don't need to know the relationship between the DXY up, whether it's going up or down at FX markets, right? The DXY is the dollar index. It's heavily weighted though towards the euro, and then the Japanese yen, followed by the British pound, and then it goes through all different other like such as the Australian dollar, New Zealand dollar, Canadian dollar, things like that. But most heavily and mirrors the euro. And what you could see as this goes down, that just means that you're seeing a weaker dollar, and as that goes up, a stronger dollar. So the DXY is used as a barometer for the dollar, right? And the only relationship you need to know is that when it's going down, it means a weaker dollar, and when it's going up, a stronger dollar. But you should not focus here really on the DXY as much as you should focus on, price alone and what's happening. So should I stay in a trade I've made until I'm stopped out, or take profit, TJ? You could take profits also into if you're buying into resistance levels. If you're all of a sudden trading at the third resistance level from entry, you might want to take profit there, right? You might not want to push it any further or wait for that retrace to take profits. All right. So, by the way, and we're gonna go back into those first good questions, the primary good ones. But Tom's asking, he's new to trading, right? And he's figuring out trend lines. I had a trend line on the S&P 500. Could we look at that? Oh, yeah, Tom. So we'll look at that at the very end then, but only because everyone's familiar with these trend lines because we've been following them since I guess since May. Right? We've been looking at these trend lines. And this is not only the trend line within the trend line, Tom. This one is also like, let me just show you really quick. This is like, you could see that same trend line is active there. It's active here. It's the angle of the trend line that's important, and it's coming in to play in multiple occasions on multiple levels. It just so happens right now I have the middle one highlighted, but we have other ones. You don't need to focus in on that, Tom. If you watch the videos we do on the S&P 500, it's all going to become clear. That's just something that takes time. But we've been following this trend line ever since May, and then we've since cloned it, and that's how we got these other two trend lines as they've come into play as well. Nice, Kevin. So Kevin, that's interesting to talk about. And the reason I say that was because it was a very interesting week. It was a holiday week. Kevin had his best week ever. That was a tough week to trade. I personally stood aside. And that's good to hear, Kevin. That's really good to hear. Yeah. Well, how about we'll come back to that one as we start at the beginning now. Let's go to the first questions that came up, and it was a good one. And it was Derek was asking when we use 2 or 3 positions when entering a trade. And so Derek, let me start by saying there are 2 different situations. You have people who are in the situation that they're using Oanda, and they could just enter the trade, Oanda FX trade. You could just enter in one position, and then you could exit in pieces whenever you want. It's an enormous advantage, and it's great. Those that are using MetaTrader, though, however, right, MetaTrader brokers for placing orders, you can't do that. You can't have those partial exits, so you need to enter the trade in multiple positions, right? And we looked at breaking that trade down into 2 or 3 positions. Generally speaking, the tighter my stop loss, you're risking the same 0.5%, right? If you're trading on 2 or 3 positions, you're still risking the same 0.5%, but you've broken that risk down between 2 pieces or 3 pieces now, right? And then, so you could exit then, if my stop loss is tight, I usually go with the 3 positions, and then I'll take a small piece off into the first resistance, no matter what, when I enter in 3 pieces, right? If my stop loss is wider, and you want to talk about stop loss placement and stuff like that. If my stop loss is wider, I just go with the 2 positions, right? And normally I'm not looking to take profit into the first resistance. Normally what I'm looking then is just move my stop loss to break even into that first resistance. And I'm looking on those 2 positions to see if I can push to the second and or third or further resistance levels. So That's why, or that's when we use 2 or 3 positions when entering. Could you review a couple of examples when to take profit? So Brian, it really simple, right? If I get myself into a trade, let's look at the Australian dollar, Japanese yen, as this is showing an entry right now, right? This has an entry right here on the Australian dollar, Japanese yen, right? When am I looking to take profit? Here is the first area of interest that I'm looking at, this resistance area, right? But this is probably where I would just look to move my stop loss to break even into that resistance. What happens at the next area of resistance, 76.08? I'm taking a piece off, Brian. That's when I would be looking to take some profit into that resistance, take a small piece off of the trade, and then watch price. Because if price is able to break through or continue breaking through, then I'm still holding. Or if I see at that point, I see price start resuming off there, I might want to take profit, the full trade. That's a nice trade, right? Give it the opportunity to break through always further to pass. This is the second resistance away, Brian. It's the second resistance away. You want to take some profit off at the second resistance away or support, right, when selling. And then at the same time, you want to have the opportunity to push that trade further if it's going to go. Sometime price bursts through levels. That's when you want to be holding. You always want to at the very least be proven wrong by the market. That will be the market making lower lows, being rejected by that resistance. Then maybe I'd want to take the full position off, or maybe not. Maybe the price can make lower lows here. I might want to continue holding. I already took profit here off a small piece. I could still hold my stop loss at break even and give this trade plenty of room to work its way before continuing on. I already took that small piece of profit. All right. So there's another good question too. Entries in ranging markets. We looked at the euro Canadian dollar is in a big range over here, right? So when you're in a ranging market, if you're trading in the ranging market, or you could look at the euro US dollar when it was in a ranging market, all through this period, through March, through all the way here when it broke out at the end of May and June. For this couple of months, it was in a ranging market. Ranging markets, you're looking to buy off support and sell off of resistance. There was a resistance level right over here. Let me draw it in just so as we're going over this example, you could see it. This was the resistance throughout that whole time. And if someone was selling resistance, what does selling resistance mean? It means price comes into the resistance, and then as it makes a lower low, that's your entry. And then off the support over here, as you came down into the support, right, as price made the higher high right there, that's the entry. Back into the resistance, that's the entry, lower low. Back into the support, there's an entry there. Are you stopped out? Maybe. Are you back in here? Maybe. Again, off of support, all these are entries. This is an entry off the resistance, right? And then what happens here? Was that an entry off resistance? Yep, right? And then there it is. There's a tight stop. So you could sell. That's selling resistance and buying support in a ranging market. Let's see what else we are looking at today. We're up to Jordan. How could you position a stop loss better so you won't get stopped out by the pip in the market reversing in your direction? Not a bad place to be. So it's an interesting place. This is a point that many traders reach, right? You come to a point where you find out that you're placing your stop losses pretty tight and your take profits, meaning that often you're getting stopped out almost to the pip before the market reverses. What do you do in that case? So when you're setting stop losses, you have a couple of different choices. Let's take a look over here at the Australian dollar, Japanese yen, as that trade is now showing an entry during this session. And if you're looking at this over here, and where do I place my stop loss, right? Most traders, when I say traders, most aspiring traders will place their stop loss right there, right? They'll place their stop loss there, and they do notice that they often get stopped out often, and then price winds up resuming in the direction they're going. So when you get to this point in time, right, the best thing to do is then set your stop loss exaggerated far away. Pull up the true trend. Like this was the last impulse of the true trend down over here. That's your area for the tightest stop loss. If you find that you're getting stopped out, go maybe one back further, right? So put your stop loss down there. Try putting your stop loss down there, right? That means your position size is now smaller, right? It's like a 1-to-1 into that first area of take profit, but you're going to move your stop loss to break even once you reach over here. So at that point, you've already improved your risk to reward overall, but you're going to find out then that you get stopped out less. And then what you can do after you like first exaggerate it maybe a little, and then say, as you get going, maybe you find out that your sweet spot is right over there. It's not as tight as it was, but you realize that you're getting out a lot quicker than the exaggerated stop loss. But first exaggerate that stop loss for a while so that you could get yourself into more winning trades and focus on managing them. That's going to build up confidence. That's going to build up experience because as you get to that first resistance, right? Even if you use that wider stop loss, and it was a 1-to-1 risk to ratio, as you came into that first resistance and move your stop loss to break even, you've now greatly improved your risk to reward coming into that what was originally a 1-to-1 risk reward ratio. And overall, that improves your overall risk to reward. Let me clean that up. Now, FX choice, I have to enter in multiple pieces. So, Paleo, I understand we don't need to wait for the end of an 8-hour candle to confirm a retest or broken resistance support, right? We can take a trade as soon as the body of the previous candle is reached. Thanks. So I'm not exactly clear on the question, but when you're asking about a retest, trying to look for a retest, the entry, right? You don't wait for that bar to close. For example, on the Australian dollar, Japanese yen, here's an entry that occurred right here. You don't wait for this 8-hour bar to close to enter that trade. The entry is during this 8-hour bar as soon as it made the higher high. Now on a retest down over here, you're asking, do you wait for this like bar to close? Let's see over here, you broke the resistance, right? And then this bar is a retrace into the support. Do I not wait? Do I enter as price is down here? So this is like a rule a robot could follow. The only entry is when price makes a higher high. So here's the test of support and it's holding. Here's another test of support, right? Price is now making higher lows. Here's another test of support, third higher low. And then this one, it looked like it broke, but it held support, right? And then right here, the next bar was the entry right over there. So that's set in stone. There's no nuance there. That's the only way to do it. Yeah. So William, generally 2 to 3x, and then you're looking for a few out of the year trades that are going beyond that, the bigger ones. Maybe towards 5 or 6x. Right? That's what you're focused on. But the majority of your trades are going to be 2 and 3, right? Yeah, and then you have those other set of trades, the lower percentage that are pushed further. 10x on foreign exchange, that would be a very good trade. Is a ranging market consolidation. So there's two different things to look at. We could find them both, Roman, on the euro US dollar. So right now, this is on the 8-hour price consolidating in this area, right? Price is consolidating. We've been since the holiday week watching it, and we're seeing price continue to consolidate in this area. That's a consolidation that's been going on right now so far for about a month. I didn't realize that, but that has been going on for a month. It's in a tight range between 12 and 1350. It's a very tight range. Now, if you go back over here, when we looked at this 2-month period, this what I would say that's consolidation, Roman, and this was a range when we were looking at that? Is there a difference? 200 pips to yeah. So anyway, I digress. You could both say that they're both a range. Is this a range? Yeah. Is it consolidating? Yeah. Yeah, Roman. Sorry for that roundabout answer, but a ranging market is consolidating. Especially if we talked about this when this was happening after we saw this huge wild volatility here, right? And then we started consolidating. We talked about how volatility leads to that consolidation. So even though it's in a range, it's consolidating, and how this consolidation was going to lead to another big move. Here was the breakout, and then you can see followed by the big move. Now we're consolidating again, and guess what? We're getting ready for the next big move, right? And those two blue lines, those are the guideposts for when that big move happens. Now, do you want to be involved in the market that's in a range, buying off support, selling off resistance? Or do you want to be involved in the breakout portion, right? So I guess there's money to be made both ways. I'm really looking for the breakout portion. So the question is, should a candle be closed to open position, or a candle can still be in action? To close a position, to close an open position, it's as soon as the level's reached. You don't wait for that candle to close. The same thing as an entry. You take the entry mid candle, right? And same thing with the stop loss. Whenever that level is reached, you don't wait for the candle to close. You take the stop loss as soon as the price is reached. Could you please talk a couple of minutes about why you're using some currency pairs and not others? Like there's no Brazilian real or the Chinese yuan, and even if their economies are big. Yeah, well, so the volume in these exotic currency pairs is not very big at all. They're very small. I don't trade exotics at all. And I think that you do much better, Stefano, staying away from exotics because they're volatile. There's huge swamps involved, and the thing about it is, I'm just looking for clarity. I'm looking for what's easy, right? And that's not exotics. The foreign exchange markets are so vast. They're so big. There's so much opportunity. I don't feel like I'm losing any opportunity. The Mexican peso is the only emerging market that I would trade. So, Stefan, this is another question. Could we talk about the most common? I'm going to butcher the pronunciation of this word. Peculiarities, features. So I'm not. You're going to have to elaborate on that question for me to be able to answer it better, or if someone else knows what he's looking for or getting at. You could maybe you're looking for the Japanese yen. Like this is the Japanese yen, for example, is a pair that tends to trend. It's a very trending pair. Is that like a trait you're looking for? You know, is the true trend is 370. 370. It's the 3 period is the entry CCI. So the Brahma Bull, I don't understand entering on multiple positions and pieces. So when we place an order in Alanda, I just hit stop. Right on Alanda, you're doing it exactly as you need to do it in Alanda, and you can't do that on MetaTrader because on Alanda, once you enter that position, you could just go ahead and exit it whenever you want in pieces. You cannot do that on MetaTrader 4. But that's why you don't understand it. But you don't need to. You're on Alanda. Focus on the wick or the body of the higher high or lower low. I use the wick. Why only enter at the next green candle? So this was going back. I think you were looking at. I forgot what we were looking at. Which pair we were looking at over there? We were seeing the 3 candles coming down. I don't know, but why? It's not the fact that it's a green candle. It's not the fact that the candle was green. You were looking to buy. It's the fact that that candle made a higher high. Paulo, it was the fact that that candle made a higher high. giving the entry. That's not because the one before it was green. The candle before it happened to be green, the one that held support, but it was just a higher high. So TJ's looking at the Australian dollar, US dollar, right? He's saying it's making a higher high. Yep. Is that an entry? Yep. Is that something you could be focused in on? Should that support be a little bit higher? I'm gonna look at that. Yeah, that makes sense. You can see the resistance here. The resistance here. That's now support coming off of it. Is that an entry? Yeah. No. And which one do you prefer if you're taking the trade? The Australian dollar, Japanese yen, or the Australian dollar, US dollar? That's the question. Do you take them both? I mean, or do you take the euro, Japanese yen? That's coming off now. Where's your stop if you took this trade? So Dan, yeah, well, for me, I'm not suggesting anything. So when I'm looking at the euro Japanese, the euro US dollar, Dan, I did try to take, I think this resistance, the rejection of this resistance here, the rejection of this area over here, right? And I'm no longer doing that myself now over here. I didn't take this rejection because that's a rejection of resistance. I didn't take it because we are now coming. We've now been consolidating. I didn't know we were consolidating over here. When I took that first trade, Dan, over here, I had no idea we were consolidating. I took that trade, right? And then this one over here, still, it was an opportunity. I took it. Now I know we're consolidating. So now at this resistance up here, I didn't take this trade, right? And I'm waiting to take a breakout over here to the upside or break down over here. For me right now, Dan, now it's coming down to a lower range. The consolidation is like that spring that's being pulled back. It's getting ready to jump. I'm no longer looking to trade that. Yeah, the cup and handle pattern works fantastically in all markets, as do all chart patterns work in all instruments in all markets. Why is the US dollar? It probably has a lot to do with living in Mexico and understanding the currency so well. It probably has a lot to do with that, but it's not just me. Obviously, the US dollar, Mexican peso, would be the most traded exotic compared to any other one of them, right? And why is the Mexican peso the most? Probably has to do with the spread. It probably has to do with the liquidity of the peso. There's more volume on the US dollar Mexican peso than there would be on the US dollar Brazilian real. Yeah. So that's a great question. Luis is asking if the same week, if at the same time you take a trade on the euro Japanese yen and pound Japanese yen, you are adding to your risk. Now, it doesn't mean you can't do that. If you're focused on 3 trades, if during that week, if you're seeing a nice setup against the Japanese yen or for the Japanese yen, it doesn't mean that you can't take on that added risk, right? Instead of 0.5%, you're basically risking now 1%. 2 of your 3 trades. I wouldn't do that with all 3 of your trades, though, right? I would migrate that risk a little bit by having that third trade, on a different pair. Yeah, let's take a look at the pound Swiss franc for a moment over here. Pound Swiss franc looks to me like it's into resistance right over here, right? You're looking to see if that resistance holds, you get a rejection, and you come down. Now, at the same time, you could see structurally off of this support down over here, it's making higher lows. And if this is able to break out over here to the upside, still, I would wait until we came in to further resistance, perhaps look to sell it then. Interestingly enough, I've seen the Swiss franc kind of remaining pretty strong over this past couple of weeks. While we've seen that weakness in the Japanese yen, we've seen that weakness in the US dollar. something to note. But Gene, what are you looking at over here when you said you missed an entry for a retest of the neck? What neck are you looking at? A reverse head and shoulders? See, let's see over here. I could see the left, the head, the right, or you're looking at a reverse head and shoulders like that. I mean, that's not a trade I would take. I mean, great that you spotted that pattern, but it is, in my opinion, this is a downtrend. It's my opinion, this is a downtrend, and I don't see the long over here personally. Yeah. Yeah, Australian dollar, Japanese yen, right? You could see that right now. Oh, that was the Australian dollar, Japanese yen, right? So it wasn't the fact that this candle was green that led to this entry. It was the fact that over here, you could see that's the first time that price makes a higher high than the previous price bar. Right over there at 74.91. It's that higher high that triggers the trade off of the support being held. It's not the fact that it's green. It's that this price bar makes a higher high. That's what you're looking at. So Michael's asking, should we read anything into gold reaching an 8-year high for US dollar, Forex pairs, or for the S&P 500? So the fact that the gold is making 8-year highs has everything to do, right, with the central bank and the monetary system. If gold wasn't making 8-year highs, as you were seeing the amount of I forgot it's like $72 trillion in the world is now negative yielding fiat. That's worrisome. That's bad. That makes sense that gold is trading up on that. That trend is going to continue, right? That trend is going to continue. Does the dollar at any point go negative? I don't know. There are some who say that can never happen. There are others that say that for sure it's going to happen, right? But all of these things, the amount of money, the stimulus, that the expansion of the Fed's balance sheet, the yet still to come, all of this is extraordinarily bullish fundamentally for gold. And that's in the current environment we're in. We're not even talking about inflation yet. If inflation were to hit, then of course gold is going to be basically a must. Basically a must. So Stefano is a very good question. And by the way, so first of all, I mean, the question is I'm trying to find out the difference between the Australian dollar, Canadian dollar, Japanese yen, Swiss franc, right? This is something that you should search definitely and learn on your own. Baby Pips might be a resource for this. If you find a better one, Stefano or anyone, let me know, and I'll include it like on the first course module where there's a couple of resources for people looking for basic information. That type of information is important to know as a trader and someone interested in the forex markets, right? It's really important, but it's not important bit for what you're doing here. That's not going to help you really. It's not essential to the course and or to you becoming a profitable trader. Now, is it an edge for me to understand the markets and know, for example, back in February when all of a sudden a very fragile situation was looking to get worse with the spread of this pandemic? Did I understand at that point that means safe haven, which means not only Japanese yen but Swiss franc? Yes. Did I also understand at that point that like Australian dollar and Canadian dollar and New Zealand dollar are commodity currencies, right? Which do really bad in those type of safe haven risk on situations? 100%, right? You'll see it happening technically on the charts. It helps to understand fundamentally, but there are people who could explain that much better than myself. So I would suggest starting at Baby Pips and seeing if you find a better resource than that, please let me know. Giles took the euro, Japanese yen. Stop loss at 121.2. Let's look at his stop placement. Stop loss at 121.2. So just under that last bar low. It's a tight stop loss for sure. That's a tight stop loss. The risk to reward going into just this first area of resistance, which is where really I have to go back and look at that line. Yeah, it's a resistance right up there for sure. That line's a good line, right? We're gonna keep that right there. And it's a nice risk reward that he's taking going all the way into there, but it's a very also at the same time low probability trade. It's a tight stop loss, right? Maybe moving it back under this support over here towards that last swing low. That's a safer stop loss. His risk reward then going into the first resistance is just 1-to-1. In that situation, you're not taking profit here. You're moving your stop loss to break even. And then at this point, that becomes a nice trade. As if someone just beginning to trade Forex, is there any benefit to going after higher leverage offered by an offshore broker? The way I see it, as where right. Nope. Absolutely. You're risking 0.5% of your account per trade, taking 3 trades per week. Awanda offers 1 to 50 leverage. That is more than sufficient. That is all you need. You don't need to go after or use any higher leverage than that. Dan just closed the position. Dan, what do you? Dan, first of all, I'm not sure what you're focused in on, Dan, but this is relevant anyway, and this is essential. If anyone saw did anyone see the weekly recap video shared in the CTM chat room yesterday? And if you did you find it beneficial? Please let me know. But in that we talked about the fact that once you enter a trade, you do not exit that trade until your original stop loss is reached. Very important. This is essential. When you enter a trade, you've done your analysis, you know where you're placing your stop loss. You do not move that stop loss, and you do not exit the trade until that stop loss is hit or you're taking profit. Yeah, I think that the easiest. I don't know about setting alerts. The best thing to do is before going to bed is that's when you need like a 10 minute to review the setups you're watching. 5 to 10 minutes, and then and/or place orders going into London. So instead of placing alerts, Phil, what I'm doing is I'm doing my really strong analysis in the morning, and that sets up everything for the day. You kind of bookmark whatever pairs you're watching, and then before bed, take a look at the market and see what you need to do. Which of those setups are possibly that you're interested in, which might be triggering, and then you could go ahead and you could have buy stop orders placed overnight to trigger during London. Yeah, Mario, without question, that's an absolute. We always trade the 8-hour time frame for Forex, and there's simply that's a rule we could give a robot to trade. Yeah, so 10 to 12 days is definitely also on the longer side. Does that have to do with entries though? Or does that have to do with the current state of the market, as we're consolidating right now? I don't know about that. Um, but at the same time, Roman, questioning your entries, well, that's good. You should always be questioning everything. You go through different phases where you kind of like you make this enormous progress and then you kind of plateau out and you're just going what seems to be sideways, not improving. And then all of a sudden you make this huge jump again, like almost to the next level, and then you level out there and you're going sideways again. And that's how you keep making progress. So if you're at a point where you're like, all right, let me always be evaluating myself, right? I'm always looking to improve. What could I do better? And you want to take a look at your entries, right? If you're taking trades that are open for 10 to 12 days, those trades are ending in profit. So that's a positive to focus in on. And if you could see any improvement and see what you're doing wrong, 100% Rome. I mean, that's what you need to be doing. Super important. What a great place to be at right now. So we're back to the Australian dollar, Japanese yen, and you're asking, the question is the potential entry on the second green candle, right? Right. This is the entry right here on this candle, the current candle, as price trades above the higher high of this price bar. Why was the entry not here on this price bar? Because on this price bar over here, this green price bar, it never made a higher high, which is all the way up here at 75.06 than the previous price bar. So that's not an entry. Isn't that pattern setup called a J hook? Is a breakout, a retest, and resumption a J hook? I don't know. I've never heard of that, Greg. That's the first time I've heard of a J hook pattern or setup. But that's just, I mean, classically that's always been called, breakout, retest, and then I don't know if people call it resumption, but the trend is resuming. Back below 4-hour 50-day moving average. So we don't look at the 4-hour 50-day moving average. That's not something that is on our charts. You're looking at the support and resistance levels, and that's it. You're not looking at the 4-hour chart, and you don't have a 50-day moving average. Dan, that sounds simple, but that's essential. That's essential. If you're looking at other indicators on your chart, if you don't have clean charts, when I say clean, if you have other indicators that we're not using on your charts, it's just noise, and it's getting in the way from you seeing and acting clearly. So we talked about making big strides in the beginning. One of the ways that you make a big improvement on yourself, Dan, or anyone else starting out, is by getting rid of the biggest, most glaring errors, which in this case is looking at the wrong time frame and or a moving average. Let's take out the pound Swiss franc you were looking at, the Brahma Bull. I want to see what's going on. I'm looking at, before I see what you were looking at, I'm going to tell you what I'm looking at. All right. I'm looking at the pound Swiss franc, and I see that we're coming up into resistance. So what that means for me, if I'm interested in taking a trade on this pair, that would mean for me that price needs to hold this resistance, right, through New York, through Asia, and give me an entry by making a lower low during the London session tomorrow. If that happens, that would open up a short entry. I'm not looking at anything else happening on this pair, right? Someone was looking at perhaps, again, a head and shoulders, right? Is that a head and shoulders pattern? Yeah, it's a reverse head and shoulders, but that's not a setup that we're looking for or taking in this case. Because is that a support you're buying over here, down here? That would be an entry we look for, buying off support here. But I would still consider this a downtrend. I wouldn't be looking to buy off support. This is a clear downtrend for me. I'm still looking to sell only resistance. So very important. Very important. You're looking for uptrends to buy off support and downtrends to sell off resistance. Thank you. Appreciate that. Yeah, a lot of people ask for that. I haven't been trading the S&P in a couple of weeks, so there's really no trades. I've been, so I don't know if anyone's noticed, and this is just an important transition piece right here. When I say transition, right? So prior to the collapse or the crisis, we were like, don't ever short the S&P. I'll tell you when to short it. Don't short the S&P. I'll tell you when to short it. It'll be clear. You'll know. Boom. That was all clear. That's when I started actively trading the S&P. And there was no reason to trade that beforehand. There's simply the FX are better markets. But during the crisis, I had to get involved. It was one of the best trades to take. Then on the upside over here, right, this was also, I'll call it fun. And then this became difficult. And now it's clear, it's kind of what's establishing itself to me, is that we're looking at the equity markets. It looks like they're going to be making higher highs. I've talked about 4,100 on the S&P 500. Yeah, is that possible? It's probably, yeah, it is. So now I've been talking everyone through this whole area of how they should be positioned, but I'm not trying even to get you to take positions on the S&P 500. I think you should be taking positions on Bitcoin. I've been really trying to frame that well for you. This is where I'm focusing my capital, my energy, right? Even as far as the FX that I'm trading in a Bitcoin account on FX Choice. You don't need to do that, but I think you should have a Bitcoin position. And if you're asking me right now, should you be trading the S&P 500? No, continue to use it as a learning tool. Continue to use it as a piece of an outlet of your creativity and love of the markets. Follow it, understand it. But it's easier to make money trading on the currency pairs. It's easier for you to focus in over here on the FX markets on the 8 hour time frame and focus in on there. So that's what I want you to do. Yeah, Wes, and I have so many more. Well, today was maybe not, it was the live stream, but definitely tomorrow and Thursday, the same video put out on Monday, which was about 8 minutes long, going over, you know, again, like you're saying here, many are on a similar learning level. So, whoever's interested in learning more, keep watching these things is going to continue their knowledge and help them keep moving forward. I'm going to be focused on a lot of them, as well as people have been leaving comments on the course modules themselves. So I'm really focused in on over there. Where do you set? Jarek is asking where I set my buy stop orders or buy sell orders when trying to enter in your sleep. And that's simply if I'm looking to buy in Asia, during Asia, I'm looking for price to make a higher high than the previous price bar. If I have a setup criteria, then my entry is price making a higher high. Or if I'm looking to sell, it's price making a lower low. So Derek, it's just the exact entry we look for. The use of the EA only for advanced traders. It's just for setting orders if you're using MetaTrader. If you're using Oanda, you don't need it. You don't need it at all. You could just set that one buy that one buy stop or that one sell stop. You don't need help placing the orders. If you're entering orders in 2 or 3 positions and you need to enter 2 different pairs and it's 11:30 at night and you just want to go to bed, that's not so easy to do on MetaTrader. So the EA sets those orders really easy. I don't know. No. Before going to bed, there's only a couple hours to Asia. The price movement, Kevin, in Asia is very limited. The volume's very low. You don't ever enter a situation where right before London opens, a couple hours, place the orders. Those don't get triggered. More often than not, too, if I'm looking to buy, that means there's a down price bar in Asia. The chances of that getting triggered, that time that I go to bed, is very small. It doesn't happen. So was the entry on the Australian dollar at the top of the green candle or the red candle? So anytime you're entering a long trade, you need price to make a higher high. So there's the first high. There's the second. There's the third. There's the fourth. It's on this one that gets taken out. It's on this price bar right here that price makes the higher high. This was not an entry because price didn't make a higher high. This was not an entry because price didn't make a higher high. And that's not an entry because price didn't make a higher high. And all those higher highs have to occur during the London session or you don't take the trade. Yep, that is 100. If that makes sense for anyone else, that's exactly correct. I don't take signals during Asia, but you take entries during London based upon candles that completed at the end of the Asian session. 100%. It's the first. So that's a really good question. That's something that actually I need then to include in the module where we talk about stop losses because it's into the first. It's into the first resistance when buying or support when selling that I'm then looking for to move my stop loss to break even. Hanson Life. Would it be just fine to set a stop entry and just not trigger in the Australian dollar Japanese yen case, right? last night I entered a trade that never triggered during London. Me too. I entered a trade last night that didn't trigger during London. In that case, I then cancel it in the morning. If those orders don't trigger, simply cancel them. Right now, would it be okay to set a stop entry and just not a trigger? Yeah, you could have. Well, you could set the buy stop entry to trigger, and if it doesn't trigger, you just cancel that order. Is that the question, Hansel? Great group in here. 100% we got a great group in here. Thanks for the great session. Thanks, Marmable. Yeah, this was actually a good one. So do you need a retest first off resistance for the pound Swiss franc? So pound Swiss franc, when you were back over here into the support, right? Were you a buyer of that support? Were you like, I mean, I wasn't, right? I'm trying to look at that and say if you're following our strategy here, that's an entry for a buy if you believe you're in an uptrend. I don't believe I'm in an uptrend. I believe I'm in a downtrend. This is not even an uptrend. This is midway. Anyway, it's not an uptrend for me. I wouldn't be buying. I'm only looking to sell. So for me, sell resistance and downtrend. This is resistance. This is resistance. Those are two areas I'm looking to sell. When would I be looking for a buy? When do I think we're in an uptrend? Were we in an uptrend over here? Let me see. Like over here on the pound Swiss franc, where you then look, I'm buying supports. I have to be honest. I was more like, well, I'm in an uptrend here and I'm buying off supports, right? This was an uptrend. And on the pound Swiss franc in that same period, that was not an uptrend. So I'm not looking to buy off support. Well, oh, do I need a retest? This is the test anyway right now into the resistance. So an entry now is a lower low during London, right? That's all we need. This is the retest. We got the retest. You don't need another retest. All right, Kevin, I missed your question. I'm so glad that that's on accident. If I miss anyone's question, that's obviously on accident. I'm trying to answer every one in order. So, yep. Yeah, no, you can't. This is a great question. So, looking at the Australian dollar, Japanese yen, look, like right here, this is when things got tough. Are you in an uptrend or a downtrend? Right? I'm looking 6 months time frame. And for me, I'm clearly in a downtrend. There's no question about this. To me, this was still a downtrend, right? What happens if I zoom in that same period and I zoom in, how far is that? That goes from 17th of March. That's 2 months, right? That's a swing trader's time frame. I'm normally like this, which is probably 3 months, but this is 2 months. There were a bunch of us, not me, who were buying off support over here at this time, rightfully so. And I kept saying to everyone, you could be buying off support here if you think this was the downtrend and we're now in an uptrend. So there's no black and white answer to that. There's no black and white answer to that. That's subjective, that's nuanced, and they both were. Even here, you could be selling that resistance. Depends on how far you're going back, and it depends on what spot you're at. Jesse tracking the weekly. I imagine it looks really bullish. I could click the 3-day right here. It looks very, very bullish over there. I imagine the weekly's even looking a little bit better. I don't think Bitcoin Oanda could be traded. Bitcoin could be traded through Oanda. I don't think so, Dan. Oh, I don't know. On the demo, I don't know. Interested how the team chat combines with the course videos and daily streams to build learning. Yeah, The chat is a resource people could go for to share Heath, first of all, Heath aside, who provides enormous value and insight. The thing is that all of that unfolds as it unfolds, right? Whenever, as things are happening, that's when things come up. Heath is always providing setups and instruction and lots of valuable information. But as it happens, as it unfolds, it's not like you just go to the chat and then like it's all you hang out, and as the markets unfold, as life unfolds, there we are together. Yeah, Brian, looking for a video on possible showing several setups and then the one that I choose and why I felt it was better than others. Yeah, 100%. 100%. That's a good idea, Brian. Yep, the Australian dollar, Japanese yen is textbook right now. That's true, William. Can you clarify the Asian answer you just gave? Philip, I'm not exactly sure what you're looking for there. So just let me know exactly what you're looking for there in the question. I'm not sure we're talking about in the Asian session. Late into the Asian session is when I'm placing my orders that I'm looking to be triggered during the London. No, it's not a retest. So, all right, this is a good question, Will. Right now, this is pulled into resistance, and if it's rejected, that's an entry. Now, for example, on the Australian dollar, Japanese yen, right? Here you just broke a resistance level. This was resistance, right? That's resistance, right? We broke the resistance level. Now we need a retest. Now we're looking for the retest, and there's the resumption. On the pound Swiss franc, I don't need a retest because I haven't broken. If I was looking to break here above the resistance, and then I was looking to buy a broken resistance level, then I have to wait for the retest, make sure that price confirms it as support, and then look to trade to the upside. Gene, we just did in the second live training session, we did a whole big thing on the true trend in the beginning. Did you see that yet? If you haven't, I'm going to make that available. I'm going to edit it right now and make it available today or tomorrow for you. But have you seen that? Woo, zoomed in pretty quickly over there. Whoa, what's going on? We're losing control. Big shout out to Heath. Tacos for Heath. Can you explain why you didn't trade the last 2 weeks in August? Is this a personal conviction or both? It's both. It's both. The volume's really low. Listen, there's a large part of a lot of people go on vacation all or stay away during the summer. Obviously, a large portion of participants are tracking the market and involved all summer. It's good trading today, and it should continue. It should be and continue to be. Is it necessary for me to trade the last 2 weeks of August? It's actually better not to trade the last 2 weeks of August. Listen, it's not until everyone comes back to their desks in September, right after the holiday, that things begin. If you're looking to trade the last 2 weeks of August, it's not something that's going to benefit you. There's no benefit to it. How about that? But it is a personal conviction, and it's because of what's the right thing to do. Ooh, Mario, gold or silver in a retirement account? I mean, for me, retirement account is about protecting that money. It seems to me that silver's getting ready to appreciate more than gold. But if I don't know. I never thought about putting gold in a retirement account personally. So I don't know. I don't know. I'm not the one to answer that. But I never thought about putting gold in a retirement account. Yeah, Dan, you could use actually World Meeting Planner and just figure out, to the closest city to you. You could do that. Do I use it as a trigger? Yeah, well, the whatever. If I'm looking to buy, it's the higher high. It's whatever the high of the Asian session was. That is my trigger. And if I'm looking to sell, the trigger is whatever the low of that price bar was. Right, Philip? So of course, no matter always the Asian session, right, or the close of the London session is used as my trigger because I take trades during, like, for example, this trade right now in the Australian dollar, US dollar, Japanese yen, that triggered during New York session, right, over the high of the Asian session, right? But always, for any before that closes, before London closes the candle, I'm looking for those trade entries. You gotta use the Asian candles. 100 million tacos for Heath. No, Wes, there probably won't be live streams the last 2 weeks of August unless the market's moving. If the market's moving, there will be. Anyway, I don't know. How about that? We'll figure that out the days before. William, you're still looking over here at the pound Swiss franc, and you're looking for what an entry might be. What is your sell entry level in the pound Swiss franc, right? So, Will, I mean, very clear. The only entry that you could have is a lower low, is price making a lower low, right? So right now, is my entry down here? No. Why? Because I'm not looking for any more trades right now on in FX, right? So what happens here when this bar closes? Will my entry be? Oh, let me move that over here. Will my entry be here at the low of this bar? No, I don't take entries off the low of the New York bar. I don't trade during Asia. So what does that mean? Well, whatever the low is of Asia, let's say it was over here, right? And let's say that price doesn't break. If price breaks over here and closes over here, there's no trade because price broke the resistance. So I'm not looking for a short entry. But if price holds that, if it holds this level, and then I get an entry, then I get an entry. Yeah, you could do that. Be careful with any Bitcoin you store with any third party, right? Whether it's BlockFi, whether it's FX Choice, whether it's Bybit or BitMEX or whatever it is, you could do that, but also be careful. Yeah, Michael, we're gonna end with this question, and then we're gonna call it a session. Let's check this out, Michael. Could you talk through moving stop loss on the pound US dollar with an active trade? Twice before, when I moved the stop loss to break even, I got stopped out on a blip. It reversed and I lost potential profit on a good call. Yeah, so let's talk about this, Michael. I mean, you're going through or talking about a stage. First of all, I'm focused in on what the question is rather than the pound US dollar, right? Because you're talking about moving your stop loss to break even, getting stopped out. You have to understand one thing. The first thing that this strategy is going to do is get you so that you're able to make money. It's going to get you to a position when you're seeing more of the trades than you ever seen before in your life actually go into profit. That's a new thing, right? And you don't like seeing when a trade is into profit getting stopped out, right? At break even or at a loss, right? But here's the thing. The whole objective is to cut your losers short and let your winners run. That's not going to happen without a portion of your trades that were slightly into profit coming back and getting stopped out at break even. Like it doesn't work that way. You can't win unless you're willing to sacrifice those few small pawns, right? Because overall, and it's like a casino, putting as many edges in your favor so that you come out ahead in the long run in your favor, right? So if you're getting stopped out at break even, Michael, that's good. That's good, right? The only point you should be moving your stop loss to break even is in the closest resistance when buying. So as you come into resistance over here, like, first of all, I don't know where a buy entry is. I don't see any buy entries. So what was your buy entry, Michael? Was it down off the support down over here? If you bought over here at this support, if you bought over here, right? And as you came into this resistance over up here, and you move your stop loss to break even, well, I mean, you're not getting stopped out. And then you broke through here, you came into the next resistance. You know, if you move, do you move your stop loss then over here or up here, right? That doesn't get stopped out. So when are you moving your stop losses to break even? That's the question. We're only in July right now. We still got a lot of time ahead of us. And I'm always following the markets, right? That's sure. 125,386, 125,386. Yeah. So I don't see an entry over there on the pound US dollar. You're looking at a different chart than me, probably a different data feed. Let me pull up maybe just like FXCM over here. No, I don't. I still don't see it. Yeah, and just remember also, this is important, Michael. Your stop loss is going to be that half a percent of your total account, even if your stop loss is 50 or 200 pips away. Different support resistance line. Okay, there you go. All right, everyone. I'm going to call it a session. It was a good one. If anyone has any comments they would like to make to help us for the next session, go ahead and definitely share that feedback. If you thought it was a good session, I think earlier you guys already shared that you liked this one. I still want to go ahead and get these into clips of different areas. I think that will help other people for learning. But I like these sessions. They're great for that individual attention to questions that are on people's minds. We'll keep doing them. That's my mom calling. So I'm gonna answer mom, and I'll see you tomorrow.